Hello everyone and welcome to today's session. So today we are going to start a very important topic. Now that topic is chapter number 7, that is reporting. Now what we are going to discuss in this particular topic and what we will be basically understanding here. So in this particular topic, what we are going to do is we are going to understand the reporting part of the audit report, like how to draft the report, what are the contents of the audit report, how actually we need to prepare this particular report. Like till now we were talking about expressing an opinion. Now we will be there to discuss about that opinion. We'll be there to discuss, okay, what is an opinion, how to express that opinion. So that is something we will be discussing now in the chapter number 7. But before I proceed, anyone has any doubt till now, whatever we have discussed, any doubt with respect to chapter number 1 to chapter number 6, because it is crucial that you understand chapter number 1 to number 6, and then we proceed to chapter number 7. So any doubt? Okay, no doubts, no issues, perfectly fine. At any point in time, if you have any doubts, you can ask the same. Okay, and then we will be taking up those doubts as you will ask. Okay. So now, how many of you have actually seen the audit report? Actually drafted the audit report? None? Okay. Okay, good, Jenny. Yes. Anyone else? That you have actually drafted the audit report? Okay. So when you draft the audit report or when you prepare the audit report, what is the first thing that you add in your report?
Title, sir.
And what is the title about? Like what title do you add?
Independent Auditor's Report.
Exactly, yes. Now, the purpose of understanding this is that in our report, from start to end, we specify that, okay, we are the independent auditor. We are not in any way associated with the entity, and that is the throughout the audit report you will be able to see. Okay. Now there are multiple kind of audit reports that we will be seeing, and for example, multiple kind of, you can say, paragraph that we will be going through. For example, if I have to provide you the example, and if I have to outline essay wise, so basically your chapter number 7, reporting, is divided into basically one, the report structure, that you will be seeing that, okay, this is the report, how we need to prepare the report from all the contents of the report. So I call it a basic structure of the audit report. Plus you will understand about unmodified opinion. Okay, basic structure plus unmodified opinion, and that is part of your essay 700. Okay, now when I talk about basic structure, basic structure contains few more things. For example, it contains key audit matter paragraph. It contains your OM and EOM paragraph. Okay, it contains other information paragraph. So this is something which is covered in basic structure, and each of it has been discussed in a separate standard. That is, essay 701 will be talking about key audit matters. EOM and OM paragraph is something that is there in essay 706. Other information paragraph is something that you will be seeing in SA 710 also. Okay. So you will be seeing a lot of these informations, about these paragraphs in the respective essays. Although we will have understanding, okay, this is, if this paragraph is there, then this paragraph is required to be added over here. If this paragraph is there, then this paragraph is required to be added over here. But we have to understand in detail that when these paragraphs comes, and that we will understand when we will come to that particular essay. Okay. So as of now, just understand, okay, it is a part of the basic structure, but they come into a play in a specific scenario, and that specific scenario we need to understand. Clear till now? Any doubt? No? Okay, great. So how we will proceed here then? What we will do is we will start with live and real audit report that is there in the public domain. We will take it that particular audit report, and then on the basis of that, we will discuss the audit report. Okay. We will take it up that audit report, and then we will discuss that audit report. And then we will compare what is the requirement of your each and every essay. Just one correction over here. It's 720. Apologies. The essay 720 is the other info paragraph. Okay. So this is how it is structured. Now, let's go through and understand one particular audit report. Again, whatever I'm showing you is the data available in the public domain. It is not something that's specific or restricted access. You can download this data from publicly available in public domain. That is perfectly fine. So I basically have 2 to 3 audit reports together with me. So we will compare each and every one so that we can have a good clarity on the topic. Again, I will request, please don't focus on the name of the company. Okay. So that was consolidated opinion. I would prefer still to go on the standalone financial statement, because we'll start with the standalone financial statements and then we will see about the consolidated ones. Okay. Now this is the audit report of a particular company on a standalone financial basis. Now, what this report is about and how it is drafted. Okay. First and foremost thing for each and every audit report is your title. That is Independence Auditor Report. This title is important. Okay. This particular title is very, very important. Okay. Now you will ask, like, okay, you are saying title, can we change the title? So whatever we are discussing as of now, okay, the structure, the wordings, and the things, if I say, then yes, you can change, but in most of the cases, you cannot. This is the minimum required to mention in your audit report. Okay. So this is the basic and minimum required thing that you are required to mention in your audit report, the way it is we are discussing as of now. Okay. So in order to form an opinion on the financial statement, in order to, form an opinion, you have to, draft the opinion in a way that it is in line with all these standards. It is what we have done till now. We have to combine everything, and we have to just provide that information in one report. Okay. So So the first and important thing is the title that should provide that yes, it's an independent audit report. Then the next part comes is the address part. To whom it is to address to? It is always addressed to the members of the company. Always. So addressee will be the members of company. That okay, we are addressing to the members of the company, not to the management, not to the board of directors, not to those charged with governance, but to the members of the company. Remember that. So this is the first part, first point. This is the second point. Now comes the third point. Okay. The third point is that it starts with your opinion. The first thing that you write in your audit report is your opinion, auditor's opinion. Now here, when we write only opinion, that means it's an unmodified opinion. And okay, so if I don't write anything, means that is an unmodified opinion. If it was a modified opinion, then I would have written it qualified or adverse opinion. Another thing to understand is when I say modified opinion, okay, when I say modified opinion, that is not equal to qualified opinion. Understand that. There's a difference in modified opinion and the qualified opinion. Modified opinion can include qualified opinion.
Sir, hello. Sir, hello.
Accordingly, when I say modified opinion, it can be qualified, it can be adverse, and
हेलो
yes.
सर आपकी वॉइस बार बार अटक रही है
Uh,
वीडियो भी अटक रहा है हेलो
uh, yes, Monica, we are able to hear something.
नो सर एक्चुअली सेम थिंग हैपेंड इन द लास्ट सेशन आई थिंक आई आई heard in the YouTube
Uh,
video and the same thing happened that time also.
you are on unmute, I think. Then, if you are not asking a question, okay, thank you. Yes. So when I say modified opinion, modified means qualified opinion. That is again that is beyond modified opinion. It is basically we say we disclaim. Okay. So we will also come and we will understand of as modified opinion as a your audit report. Yes, anyone was. Am I audible now? Okay, 80 seconds. Am I audible now? अभी बराबर है? वॉइस सीधा है वीडियो? मेरा लो दिखा रहा है. Okay, let's see. I have changed the network. Then let's see. Okay. So
Sir, can you repeat modified opinion because your voice uh, couldn't reach us?
no issues. I'll repeat it again. Of modified opinion. Okay. Now, what is a modified opinion? Now, when I talk about modified opinion, basically it is your two type of opinions are included. Modified opinion is not a qualified opinion, but modified opinion can be a qualified opinion or can be an adverse opinion. There are two type of modified opinions. So when I use the term modified opinion, it is either can be a qualified opinion or it can be a adverse opinion. Sometimes people, students think, okay, modified is equal to qualified. Answer is no. Modified can be adverse. And we will also see disclaimer of opinion. All the modified opinions are covered by SA 705. So when we will see with SA 705, the modified opinions, at that time, we will also discuss different kind of opinions. Okay.
Okay,
So
sir.
So do not take as a modified opinion is equal to the qualified opinion. No, it can be modified, it can be adverse opinion, it can be qualified opinion, and it can be disclaimer of opinion also. So the third opinion, which forms part of modified opinion, is disclaimer of opinion. So all these three come under the purview of modified opinion. Okay. Now let's go back to the audit report that we were discussing. Okay. And just let me know in the chat if anytime you feel the voice is getting stuck or the video is not coming, so I can take care and immediately rectify that. Okay. Yeah. Now, when we were discussing about opinion, I told you that this is an unmodified opinion. That's why we have written only the term opinion. Would have been it a modified opinion, so I would have written as a qualified opinion, adverse opinion, or disclaimer of opinion over here as a heading. But I have not written that. I have written only opinion, or they have written only opinion, means this is an unmodified opinion under SA 700. Remember that. Now, that is the third part that we need to understand about the report. There are multiple things we will understand, and the question will come from time to time. Sir, are we required to remember this particular what you can say structure the way it is there, like first title, then addressee, then opinion paragraph, then this paragraph, then this paragraph? Answer is yes. You cannot shift a paragraph before. Like I cannot say that, okay, auditor's responsibility should come into the start. Usually not. It should go in a flow. It should go the way it is given in the standard. And this is how it is given in the standard. Okay. Now, in opinion paragraph, there is something that we are required to write. In opinion paragraph, we are required to mention something. The wordings are also prescribed by the standard. Okay. So the first thing you need to identify in the opinion paragraph is entity whose financial statement have been audited. Okay. And the list is also given in your study material. So if you come on page number 7.6 of your study material, you will see basic elements of audit report. title, addressee, we have discussed. Auditor opinion, this is something we are discussing now. Auditor's opinion, the third part. Okay. And the things which are required to be mentioned in auditor's opinion is on page number 7.7. So this is the first paragraph that you are required to mention in your first paragraph, auditor's opinion paragraph. That is the entities whose financial statement have been audited. About the entity. If we go back to our audit report, you will see they have mentioned it that we have audited the standalone financial statement of a particular company. So the first thing they have identified which entity they are talking about. So the first thing is that we have audited the standalone financial statement of a company and its joint operations. So they have identified the entity. Okay. Then the next thing we are required to identify is the financial statements. That what financial statements you are auditing. What financial statement you are auditing, and the same has been done in the audit report. That after identifying the standalone financial statements of the company, they are mentioning this. This is the standalone financial statement, which comprises of standalone balance sheet as of 31st March 2024, standalone profit and loss account, including your other comprehensive income, standalone statement of changes in equity, standalone statement of cash flow for the year ended, and notes to the standalone financial statement. So we have identified what we are auditing, and that is also required. That is the thing required, like identify each title of statement in the financial statement, like balance sheet, P&L, your statement in changes of equity, cash flow, and notes. Then you are required to refer to the notes, including summary of significant accounting policies, and specify the date or period covered by each financial statement. If you see here, so they have specified the title of the financial statement, that is standalone financial statements. They have specified the title of each standalone financial statement, that is your balance sheet, P&L, statement of changes in equity, cash flow. Then they have referred to the notes. Then they have referred to the material accounting policies and other explanatory information. Plus, they have identified the date and the period. If you see here, it is there as at balance sheet as at 31st March 2024, and profit and loss account, changes in equity, cash flow for the year ended. So they have specified the period also. So if you see in this particular paragraph, we have identified not only entity, not only the type of financial statement, but title of each financial statement. Then we have specified the notes, we have specified the accounting policies, then we have specified the period also. Entity, then type of FS, then your title, then comes to the notes, then comes accounting policy, then comes your period. Okay, so these are the things that you are required to mention in your first paragraph of your audit report, that is the opinion para. Clear? Any doubt till now? A doubt may arise, sir. What if, why we need to mention dates and the title? What if we don't mention this? No. That is the requirement of your standard. So whatever we are discussing as of now is everything prescribed in SA 700. That is the minimum information that is you are required to give while drafting the opinion paragraph. This is just was about opinion paragraph. Clear? So in the first paragraph of the opinion paragraph, you identify the statements on which you are issuing the opinion. Now, in the second paragraph of the opinion paragraph, you actually provide your opinion. You actually give the opinion that you have, built up by performing all the audits, by accumulating all the audit evidence, by performing the, evaluation of the audit evidence, material misstatement, everything that is coming into your second paragraph. Now, tell me one thing, okay, before we proceed to the next and second paragraph, okay, how many of you are aware about the fair presentation framework and the compliance framework? What is the difference between both of them? Fair presentation framework and the compliance framework. Can anyone tell me a difference between both? What is the difference between fair presentation framework and the compliance framework?
So I'm not sure whether it is exact or not. I think fair presentation means the general purpose financial statement framework, and the compliance framework means it is according to special purpose financial statements framework.
Okay, good. Anyone else would like to add something to this? Anyone?
Hello.
Yes.
As a fair presentation framework means it can allow the departure from the requirements. And compliance framework, it cannot, I think so.
Okay. Okay, good. Anyone else would like to add something more, or they have a different answer? Anyone? No? Okay. So let's understand both of the frameworks, and then we will discuss like whether our opinion is based on which one. Okay. Now, in basically, if you see a particular audit report, okay, then what is fair presentation framework? Now, fair presentation framework basically talks about, okay, when the framework where we are talking about, that we are saying our financial statement, okay, when we refer to a fair presentation framework, we refer that, okay, our financial statement provide disclosures that are necessary to be fair, true and fair, to achieve the fair presentation. So whenever we say they are, giving true and fair view, so that is your fair presentation framework. Okay. So I am saying that, okay, my financial statement giving true and fair view. But when I talk about compliance framework, it requires, it is something, it is the requirement, or it is the compliance with the framework. So let's say there is a specific requirement where they have to report on certain matters. If that has been met, then that is a compliance framework. So when you say compliance framework, it is something kind of, compliance which was given. So fair presentation framework where I have to achieve true and fair view. Compliance framework is something which is adherence to the rules and regulations. It may be true and fair view, it may be beyond true and fair view. Okay. So when an opinion is issued, we say it's a true and fair view. We are talking about compliance framework. And when we say it complies with this particular regulation or this particular act, we are talking about compliance framework. And when we say it is a true and fair view, it achieves true and fair view, we are talking about fair presentation framework. Okay. So true and fair view usually is related to the fair presentation framework. And when we say that, okay, this particular financial statement or this particular report or this particular thing has complied with the provisions of Companies Act or this particular regulation, or this is something, it has complied with, in that case, we are talking about compliance framework. Clear? Any doubt or, query with respect to the compliance framework and the fair presentation framework? Any doubt? Okay. So now you understand the difference between both. In here, when we refer to an audit report, we have to understand that, okay, whether we are referring to the compliance framework or fair presentation framework, because we have to provide our opinion paragraph accordingly. Okay. So when we talk about compliance framework or fair presentation framework, in our opinion paragraph, we have to write that the accompanying financial statement present fairly in all material respect or gives a true and fair view. Because we are talking about true and fair view with respect to the fair presentation framework. But when we talk about compliance framework and we are giving an unmodified opinion, we have to write that in all material respects, that it is in complying in accordance with in all material respects. So the wordings change accordingly according to your framework. If it is a fair presentation framework, I will use the wordings like gives a true and fair view. If it is a compliance framework, I will say it is complying in all material respects. Okay. So this is how I draft my wordings based on my type of framework based on which I'm required to issue the opinion. Okay. In the current case, if you see the opinion paragraph, that is, in our opinion and best to our information and according to the explanation given to us, the aforesaid standalone financial statement give the information required by the Companies Act. This is first thing they are talking about compliance framework, because it says they give the information that is required by the Companies Act. Subsequently, they are talking about in the manner so required, okay, and gives a true and fair view in conformity with the accounting principles generally accepted in India. So here we are using both, because we have to, at the one end, we have to talk about Companies Act and its compliance. Basically, it's a compliance framework. And on the other hand, we have to talk about fair presentation framework. So we also mentioned that it gives a true and fair view in conformity with the accounting principles generally accepted in India. So that is the opinion we are giving over here. Combining both. Okay. Then in your opinion paragraph, what you are required to do is, after having a fair presentation framework opinion or compliance framework opinion, you need to specify, okay, you need to specify about the particular financial reporting framework. You need to specify about the accounting standards or financial reporting framework or such other framework that is there. So for example, in our audit report, we are mentioning that accounting principles generally accepted in India. This is something we are prescribing that, okay, this is something that has been followed or this has been, reviewed, basis of which we are giving a true and fair view. So fair presentation framework, this is the framework we are talking about. And then you talk about the state of affairs of the company, about the balance sheet. Okay. Then you talk about this is a period, then profit and loss, other comprehensive income, changes in equity, cash flow for the year end date. So you talk about all the things that you have already mentioned in the first paragraph, with the respective period. So this is your opinion paragraph. Any doubt with the opinion paragraph? Any doubt?
सर
Yes.
सर एक क्वेश्चन है कि क्या आप बता सकते हैं कि कौन सा ऐसे किस फ्रेमवर्क के साथ ज्यादा रिलेवेंट होता है? लाइक हमें अगर 560 में रिपोर्ट करना है तो हम ट्रू एंड फेयर व्यू का रिपोर्ट करेंगे, राइट, रेदर देन प्रेजेंटली फेयर के।
I would say rather to look at it is not on the basis of essay, because see, whether you are doing audit with respect to in compliance with a particular act or in compliance with the fair presentation framework, you have to comply with all the essays. ठीक है?
सर एग्री, बट आई एम सेइंग जस्ट ओनली अगर मुझे सिर्फ एक ही ऐसे में जाके कुछ प्रॉब्लम लग रही कि ये इस ऐसे के अकॉर्डिंग सारे रूल्स नहीं सेट हो रहे, बाकी सारी चीजें उसने फॉलो करी है, कहीं पे भी मुझे फ्रॉड डिटेक्ट नहीं हुआ और कुछ भी नहीं मिला, सिर्फ ओनली एक कुछ मुझे ऐसा कुछ फाइंड आउट हुआ कि जो सिंपल एक सिंगल एक ऐसे को टारगेट कर रहा है, तो मैं फिर कौन सा फ्रेमवर्क दोनों में से ज्यादा प्रेजेंट करना चाहूंगी, प्रेजेंटली फेयर और ट्रू एंड फेयर व्यू?
It is not that simple, because see, let's say for example, take one essay. Let's say 570 that you mentioned, going concern. Sometimes, and not sometimes, but a lot of times, companies act itself also requires to perform these kind of assessments. Now, if let's say for example, if essay, what is the essay basically? Understand, essay is not only based on your fair presentation framework. Each and every essay has something with respect to the compliance framework also. So the procedures which are specified in your essay also addresses to the compliance framework. So if I ask, like, okay, if I tell you that, is there any essay which only caters to the fair presentation framework? Answer is no. They are structured in a way that they have to, meet the requirement of both of the frameworks. Otherwise, let's say for example, if I say today, one particular essay, this only talks about fair presentation framework, not the compliance framework, then what procedures you will perform to check for the compliance framework for that particular area? That is something missing. So you will say then there is a missing area or missing lacuna in the essay. So over the time today, if I talk about after amendments, after changing in the essays, today all the essays caters both of the parts, compliance and fair presentation. There is not a single essay, I would say, that is coming into my mind also, that is only caters to one specific part.
Okay, sir. Thank you.
Any other doubt, guys? Any other doubt? No? Okay. If no other doubts, okay, then let's understand further what is the next that we are required to do. So everyone clear with this opinion paragraph, that how it is structured, how it is drafted? Okay. Now the second thing, or subsequent to the opinion paragraph, the fourth paragraph, that is there is the basis of opinion paragraph. Means on what basis we are saying that it is an unmodified opinion. What we have done to say that this is an unmodified opinion, that is something you are required to mention in your basis of opinion paragraph. Okay. So something that talks about, okay, what you have done to make it or to say that's an unmodified opinion. Now first let's read the paragraph and then we will compare with the requirements. So we conducted our audit in accordance with the standards on auditing specified under section 143(10) of the Act. Our responsibility under those essays are further described in the auditor responsibility for the audit of the standalone financial statement section of the report. They are referring some section, we will see. We are independent of the company in accordance with the code of ethics issued by ICAI, together with the ethical requirements that are relevant to our audit, of the standalone financial statement under the provision of Act and rules thereunder. And we have fulfilled our ethical responsibilities in accordance with these requirements and code of ethics. We believe that we have obtained the evidence, which is, we believe that the audit evidence we have obtained is sufficient and appropriate to provide a basis for our opinion on the standalone financial statement. So this is the paragraph. One, they are talking about auditor's responsibility. Then they are talking about, something they have complied with the SA. Then they are coming to the ethical requirements and code of ethics. Then they are saying that, they have received the sufficient and appropriate audit evidence. Now let's understand the requirement and let's compare the particular paragraph then with that. So what basis of opinion paragraphs or requirement is? First of all, even the headings also. So the heading should be the basis of opinion. Now this heading will change according to the opinion type. If this would have been, modified opinion, then I would have written that basis of qualified opinion or adverse opinion, basis of adverse opinion, etc., etc. Like so. We will see further in the SA 705 that when we issue a qualified opinion or adverse opinion, are we required to issue basis of opinion in the similar way or in a different way? Or how we are required to issue basis of opinion paragraph in case of a disclaimer of opinion and adverse opinion. Okay. So, but as of now, understand that basis of opinion, the heading will change based on the type of opinion. Okay. Now coming to the next point is what paragraph requires, what we are required to mention in that paragraph. SA says that please mention that the audit has been conducted in accordance with SA. That state that the audit was conducted in accordance with the SA. The first thing that we need to mention is audit is conducted in accordance with the SA. And that is we have mentioned over here. That we have conducted the audit in accordance with the standards specified under section 143(10) of the Act. So first thing they have mentioned is basis of SA. Then the second thing is mention the responsibility of the auditor and mention there is a separate section for that. Okay. So refer to the section of auditor's report about the responsibility under the SA. Okay. About the responsibility under the SA that you are required to mention in your audit report, and that has been mentioned. See, our responsibility under those SAs are further described in the auditor responsibility for the audit of standalone financial statement section of the report. So referring to the section. Then comes include a statement on independence of the auditor, that you are independent of the entity, okay, that you have complied with the ethical requirements, you have fulfilled other ethical requirements, and you should refer to the code of ethics by ICAI. That is something requirement of the standard again. So mention that auditor is independent, ethical requirements have been fulfilled, other ethical requirements that are there you have fulfilled that also, and refer to the code of ethics of ICAI. If you see, that has been done over here. We are independent of the company in accordance with the code of ethics issued by ICAI, together with the ethical requirements that are relevant to our audit. So first is code of ethics. Then coming to the together with the other ethical requirements that are relevant to our audit of standalone financial statement under the provision of Act and rules thereunder. So other ethical requirements. Okay. And then they are mentioning that we have fulfilled that ethical requirement and the code of ethics both. So if you see here also, you need to mention that auditor is independent, ethical requirements which are there. Okay, you need to refer to the code of ethics and provide that you have fulfilled those ethical requirements. Now, the last part of the basis of opinion paragraph is that you have obtained sufficient and appropriate audit evidence to base your opinion. Here also, they have mentioned the same, that we believe that the sufficient and appropriate audit evidence was obtained. We believe that the audit evidence we have obtained is sufficient and appropriate to provide a basis for our opinion on the standalone financial statement. So this is how your basis of opinion, the fourth paragraph, is drafted. You specify essay, you specify ethics, code, then sufficient and appropriate audit evidence. Essay, ethics, code, and sufficient and appropriate audit evidence. This is something is required to be mentioned in your basis of opinion paragraph. You can say that SECA or SECS, basically. That is the essay, ethics, code, sufficient and appropriate audit evidence. Clear? Any doubt?
सर
Yes.
अगर जो बेसिस हो, अगर हमारा ओपिनियन क्वालिफाइड या फिर मॉडिफाइड ओपिनियन हो, तो उसका रीजन भी हम बेसिस और ओपिनियन में ही देंगे.
Yes, yes, absolutely. So the basis of opinion paragraph will undergo a change when there will be a modified, or we will say qualified opinion or adverse opinion. Even in the case of disclaimer of opinion, like there is no basis basically. That's why we are not able to issue an opinion and we are disclaiming. So these two particular parts, like opinion and the basis of opinion, undergo a lot of changes.
Yes.
And
Sir,
we will see that also with an example. Yes.
Sir, the mnemonics you written here is SECS. So ethics and code of ethics are somewhat similar line. तो responsibility के बारे में भी बताने तो SRCS बोलेंगे तो चलेगा?
Chalega, perfectly fine. If you remember, that one is perfectly fine. SRCS. Fine. Any doubt? I'll mention responsibility also. So you can say SRCS. Perfectly fine. Clear with the basis of opinion paragraph? Okay. Now, if no further doubts, then we will move to the next paragraph. Usually, the next paragraph is on your going concern. The next paragraph is usually on the going concern. I'll show you just a minute. We discussed that particular paragraph, remember, in the last session on the going concern, that how the going concern paragraph is there in the basically your report. Okay, I will show you with one more example. Again, please don't focus on the name of entity. Okay. See, after your opinion paragraph, this is one of another, audit report where you have an opinion paragraph, where you have a basis of opinion paragraph, and then you have a paragraph of material uncertainty relating to the going concern. This paragraph is nothing but we have already seen as a part of which essay? Come on quickly.
570.
570.
Yes, 570. We have already seen that how we draft this essay as per 570. But again, we will read quickly so that we can, revise the particular essay. That what is written, attention is invited on note 30 regarding the continued losses, erosion of net worth as at the year end, and the significant reduction in the company's income from operations and other matters detailed in the said paragraph. These events and conditions indicate a material uncertainty which cast a significant doubt on the company's ability to continue as a going concern, and therefore may not be able to realize its assets and discharge its liabilities, including potential liabilities, in the normal course of business. The company's ability to continue as a going concern is solely dependent on the finalization and approval of the resolution process, which is not wholly within the control of company. The management of the company has prepared the standalone financial statement on going concern basis, considering the status of the resolution process and step taken by the resolution board. Our opinion is not modified in respect of this matter. Simply, we specify the conditions basis which we are saying there is a material uncertainty. Okay, we point out the relevant note from the financial statement where the material uncertainty is there, like they have specified anything. We specify why we say the use of going concern basis of accounting is appropriate, and this is very important part. At the end, we say that our opinion is not modified with respect to this matter. So this is how you are required to draft your third paragraph, that is material uncertainty paragraph. After the basis of opinion, you come and you mention about the material uncertainty. Clear? Any doubt? Any doubt? Okay. So if we go to the study material also, we discuss the basis of opinion. Then we discuss the going concern paragraph. This is already covered here as per essay 570. Okay. Now coming to the next part is your paragraph that is there on the key audit matters. So we discussed now this one, going concern. Now we will see a paragraph on the key audit matters. Okay. But we will not discuss this paragraph on the key audit matters. Reason because we will discuss this paragraph basically once we are into the essay 701, where we will understand what is the key audit matters, how the key audit matters are required to be reported, and how like your key audit matters is different from a qualification. So that is something we will understand when we will do 701, essay 701. But as of now, understand the next paragraph that will be there is a key audit matter paragraph. I will say essay 701. We will come back on this paragraph when we will discuss essay 701. So you have a lot of key audit matters, the way that is required to be given. We will discuss that in the essay 701. Okay, so now subsequent to the key audit matters paragraph, once the key audit matter paragraph is there, okay, after that you are required to provide other information paragraph. You are required to provide other information paragraph. Now the question comes is whether this is the other matter paragraph as per essay 706 or is this different one. So this is not the other matter paragraph. Understand, this is something different. This is as per essay 720. The other information paragraph is not your other matter paragraph. This is as per essay 720, not SA706, and it is not equal to other matter paragraph. So other matter paragraph has a heading of other matters, whereas other information paragraph has a heading of other information. Both are different. Both have a different purpose. We will see other matter paragraph and other information paragraph when we will deal the respective essay after essay 700. So once we will go to either essay 706 or essay 720, we will come back to these paragraphs and we will discuss this. And if to show you the other matter paragraph, can anyone tell me where we have seen the other matter paragraph? Where we have discussed the other matter paragraph till now? Any specific essay that you think is relevant? Where we have discussed the other matter paragraph?
Essay 570.
Okay. But over there we talked about material uncertainty, a separate paragraph, not the other matter paragraph. Specifically. So there is one more essay where we discuss specifically on the other matter paragraph. One more essay where we specifically discussed on the other matter paragraph. Anyone? Something, I think, chapter number 2 or 3. Basically in 2. Anyone? No? Okay. So, see, this is your other information paragraph. And if I just go below, this is your other matter paragraph. Here, the information which is given is your as per SA 600. Remember that we discussed that when auditor, principal auditor is relying upon the work of component auditor, he is required to mention that in the other matter paragraph. See this paragraph. We'll read quickly this paragraph. That we did not audit the financial statement information of one joint operation whose financial statement, financial information reflect total asset of rupees this at the March 2024, total revenue this, net cash flow, cash outflow of this for the year ended on that date. These financial statements and informations have been audited by other auditor whose report has been furnished to us by management, and our opinion on the consolidated financial statement so far it relates to the amount and disclosures in respect of these joint operations are based on solely on the report of other auditor. Remember this thing that we discussed in SA 600? Yes or no?
Yes, sir. Yes, sir.
That is something coming to your other matter paragraph. Other information and other matter, both are different. Both have a different purpose. Okay. So other information is not equal to other matter paragraph. Other matter paragraph specifies as per SA 600, and there are other things that we will understand as per plus SA 706. We will understand SA 706 also with respect to the other matter paragraph. So SA 600 also says that you are required to mention something in other matter paragraph, but SA 706 specifically provides that what things should go in the other matter paragraph. And we will come back. Definitely we will come back on this particular part because this is very important. Something related to the auditor, auditor's responsibility or auditor's report. That's why we use other matter paragraph. And we will understand the difference between the emphasis of matter paragraph and other matter paragraph when we will discuss SA 706. Let's for now go back to the audit report that we were discussing. So other information not equal to other matter. Both are different. Both have a different essay. Okay. Subsequent to that, subsequent to your other information, you need to provide the responsibility of the management for financial statement. Okay, you need to provide what is the management's responsibility for the financial statement. One, it is for the preparing the financial statement. That management responsibility for financial statement, one includes preparing financial statement in accordance with the financial reporting framework. Second, entity's ability to assess the entity's ability to continue as a going concern assessment. Remember, so this is coming your as per SA 570, and this is the basic responsibility. Remember of SA where we ask management to confirm this responsibility, which is that SA where we ask management, please confirm this responsibility.
Management representation letter, all I say.
Okay, 580, yes. Apart from that, where?
The audit evidence.
The fraud.
No. The thing that we take in the start of the audit engagement, very start, before even starting audit engagement.
Engagement letter.
Yes. We ask management to confirm their responsibility, and which SA is that?
SA 210.
Yes, very good. When we are talking about SA 210, the terms of audit engagement, over there, we have to mention a paragraph about the responsibilities of management. Remember, what is the responsibility of a management? And there is a precondition to the audit that management acknowledge their responsibility with respect to the preparation of financial statement. Precondition to the audit and management responsibility section in your engagement letter. Plus you take a representation when you talk about 580. So 580 plus 210, both we already confirmed with the management. On the basis of that confirmation, now we are putting in that audit report. Once we receive that confirmation, then only we go and put in our audit report that, okay, management has confirmed this responsibility. That's why we are mentioning in our audit report that this is the management's responsibility. So we specify that, okay, this is the management responsibility, that preparing of financial statement and going concern assessment. Okay, so this is something we mentioned. Let's go back to the audit report and see. See, the company's management of the board of directors are responsible for the matters stated in 134.5 of the Act. With respect to the preparation of these financial statements, that gives a true and fair view of the state of the affairs, profit and loss account, other comprehensive income, changes in equity, cash flow of the company in accordance with the accounting principles generally accepted in India, including Ind AS specified under section 133 of the Act. The management, the respective management and the board of directors of the company are responsible for the maintenance of adequate accounting records in accordance with the provision of the Act, including safeguarding of asset for each company, okay, preventing and detecting frauds, other irregularities, selection of accounting and application accounting policies, making judgments, estimates, reasonable and prudent, okay, design and maintenance of internal financial controls, operating effectively, its complete accuracy and completeness of the accounting records, okay, relevant to the preparation and presentation of standalone financial statement that gives a true and fair view, which are free from material misstatement, whether due to fraud or error. So first, we are specifying about what is the responsibility in detail. What is the responsibility of the management? That, okay, management says that, okay, this is our responsibility, that we have to prepare the financial statement, internal controls necessary, okay, to have the financial statement free from material misstatement due to fraud and error. Okay. Now, if you see this particular paragraph, whatever we have done in terms of essay, we are specifying this only. For example, estimates. Which was the essay?
Essay 540.
Yes, very good. Essay 540. Design and implementation and maintenance of internal controls, where we discuss about the internal controls. Come on. Say where we discussed about the internal controls.
315.
Sorry. 315. Yeah. Operating effectiveness of those internal controls. We discussed that in your essay 330 when we are designing the response to the assessed risk. Okay. Then again, now when I talk about the provisions of Act with respect to detecting the fraud and other regulatories, so where we discuss about the detecting and preventing of fraud.
240.
240.
Yes. So if you see, we are not writing something new. We are writing that we are already aware of the management's responsibility, but we need to make sure that the reader of the audit report is also aware about these responsibilities. So presentation and preparation of the financial statement, that they should give a true and fair view and are free from material misstatement, whether due to fraud or error, is the responsibility of the management to comply with the Indian accounting standards and accounting standards generally accepted in India. That is the applicable financial reporting framework. To comply and to prepare the financial statements as per the applicable financial reporting framework is the responsibility of the management. In that case, we are not writing something new over here. We are writing that is there. We understand, and we have already asked management to confirm this particular thing multiple times. Clear? Then the next paragraph is on the going concern basis, like going concern assessment. So it says that in preparing the financial statement, the respective management and board of directors are responsible for assessing the ability of the company to continue as a going concern basis, disclosing as applicable matters relating to the going concern and use of going concern basis of accounting, unless the respective board of directors either intend to liquidate the company or cease the operation or has no realistic alternative but to do so. We are talking about the going concern basis assessment that the entity performs. Going concern assessment of entity plus use of going concern basis of accounting. And that is with respect to the management's responsibility, that it is the responsibility of management first to perform the going concern assessment, then to use the basis of accounting, whether going concern or any other. Okay, if they are using going concern, then the company should continue. If they are not using, if the company is not going to continue, it is going to cease operations, it is going to liquidate, or they don't have any option available, okay, to continue the entity, like they are stuck in the losses or something like that, please do not use the going concern basis. That is the responsibility we created again. Okay. And then the last part is the responsibility of the board of directors to oversee the financial reporting process of each company. So this is the management responsibility part that is required in your audit report. Any doubt with this? Any doubt?
Excuse me sir.
Yes.
इसके रिलेटेड तो कोई डाउट नहीं है एक्चुअली, बट द गोइंग कंसर्न पैरा जो था उसके रिलेटेड मैं पूछ सकती हूँ क्या कुछ?
Yes, yes, definitely. Why not?
सर उसमें यानी ऑडिटर ने लास्ट में लिखा था कि
Our opinion is
our
not
opinion is not modified
yes.
on the basis of this, but where he shows some matters related to, अगर यानी वो मैटर्स मटेरियल नहीं है इसीलिए उन्होंने ऐसा लिखा था ना?
No. So what is the scenario is, let's say when you are when you are reporting the going concern matter paragraph, let is a material uncertainty. I'll go back to that particular report.
Okay.
Okay.
Yes.
When I am using this particular paragraph, okay, material uncertainty related to going concern.
Yes.
What I'm doing is I am inviting the attention of the reader. If you see, attention is invited on this particular note, means management has already disclosed some information which I think in my professional judgment is correct. The disclosures are as per the applicable financial reporting framework. I feel yes, there is a material uncertainty, but still the use of going concern basis of accounting is correct because there is some additional information that because of this the management thinks, okay, no, we will be able to continue the company will not get closed.
Yes, sir.
So even though having material uncertainty, when the use of going concern basis is appropriate, management has disclosed appropriately. So I just I'm just inviting the attention to the readers, nothing else.
Okay, sir.
If let's say for example management would have not disclosed this, if there was an incorrect usage of going concern basis of accounting, then instead of giving this material uncertainty paragraph directly, I would have mentioned this in my basis of opinion. Or if
Yes.
it is an adverse opinion, then directly opinion paragraph and basis of our opinion paragraph will go a drastic change.
Okay, sir. Yes, sir. Clear. Thank you, sir.
Yeah. Any other doubts? Anyone? See, I would like you to ask as many doubts as you can. Please do not hesitate or do not stop yourself from asking the doubts. Okay, this is very important part, that we are understanding the audit report word by word. We are understanding the structure of the audit report, that how it is drafted. What are the things that are minimum at minimum mentioned in your audit report? And this is not required to be changed. I cannot have the auditor's responsibility or management responsibility paragraph as a first paragraph in my audit report. No, it should start with the opinion and then it should come the basis of opinion. Just imagine, I have the first paragraph opinion, then management responsibility, then key audit matters, and somewhere in the between or at the last, I have a basis of opinion. How it sounds? Or do you think the reader will be comfortable to read that report? Or I have a management responsibility on the top, then key audit matters, then other information, then other matter, emphasis of matter, then opinion, then some other things, and then your basis of opinion. The reader will get confused. That's why there is a particular layout, there is a particular way of describing the things, and this is something prescribed in your standard. Okay. If no doubts, then let's proceed. The next thing that we will understand subsequently is your auditor's responsibility paragraph. Now, this is a very interesting paragraph. This is not something new that we will be discussing in auditor's responsibility. We have already seen what is the auditor's responsibility at multiple stages in different standard. And that is something we will reiterate over here. That, okay, this is something the auditor's responsibility, we know. Okay, so let's read the report with respect to the auditor's responsibility paragraph, and then we will identify the standard, what is there, and all that stuff. So your next paragraph, auditor's responsibility. Now, the first thing they are writing is, our objectives are to obtain reasonable assurance about whether the standalone financial statement as a whole are free from material misstatement, whether due to fraud or error, and to issue auditor's report that include our opinion. Where this is something we have read this one, from where it is coming, any idea? Any idea from where it is coming?
Sir, ऐसे 240.
No.
No. ऐसे 200.
Yes. The overall objective of the audit or auditor.
Yes,
SA 200, the overall objective prescribes this thing. So this is something already coming from SA 200. Then you have that reasonable assurance is a high level of assurance, but it is not the guarantee. Okay, it is not the guarantee that an audit is conducted in accordance with the with SA will always detect a material misstatement when it exists. Misstatement can arise from fraud or error and are considered material if individually or aggregate they could reasonably be expected to influence the economic decision of the user taken on the basis of these financial statements. So again, this particular part where we are discussing about the reasonable assurance is, it's not something, is related to this only standard. We have discussed this particular part multiple times, like what is a reasonable assurance, what is the requirement of the auditor with respect to the giving, an opinion, not only in the SA 200, but in each and every individual SA. Even when we talk about materiality, material misstatement, we are referring to the materiality. Okay, so this misstatement can arise from fraud and error and considered material if individually or aggregate they could reasonably be expected to influence the economic decision. So this is something coming from the materiality and SA 450. So SA 320 plus 450 together, it is something, giving this particular part. Then, as a part of an audit, in accordance with the SA, we exercise professional judgment and maintain professional skepticism throughout the audit. Again, this is the part which is coming from your SA 200. Professional skepticism and professional judgment. Then there is the next part which talks about, we also identify and assess the risk of material misstatement of the financial statement, whether due to fraud or error. We design and perform audit procedures responsive to those risks and obtain evidence that is sufficient and appropriate to provide the basis for opinion. The risk of not detecting a material misstatement resulting from fraud is higher than one resulting from error, as fraud may involve collusion, forgery, intentional omissions, misrepresentation, and override of control. So I will bifurcate this in two parts, basically. The first one where we are talking about the risk of material misstatement, and the second part we are talking about risk of fraud. So the risk of material misstatement, where we have covered this one?
SA 315.
Yes. So this is something coming from SA 315. And fraud risk?
SA 240.
SA 240. Yes, correct. Then again, We also obtain an understanding of the internal control relevant to the audit in order to design audit procedures that are appropriate in the circumstance. Under section 143, as of now, I'll highlight this separately because under section 143(1) of the Act, we are also responsible for expressing opinion on whether the company has adequate internal financial controls with reference to the financial statement in place and operating effectiveness of such control. So this is something coming from your Companies Act. This is a specific requirement of the Companies Act, okay, where you are required to mention or report on the section 143(3)(I). We will see that. So this is part of section 143 Companies Act. Okay, we call it IFC or IFCR. So these are terms that we use. IFC reporting. Then, but the first part is nothing, again, the extension of your SA 315 that we are talking about internal controls that we have already seen in SA 315. Then evaluate the appropriateness of the accounting policies used and the reasonableness of the accounting estimate and the related disclosures made by the management and board of directors. So where do we see the accounting estimates?
SA 540.
Yes, SA 540, absolutely correct. And accounting policies? Accounting policies? There was one essay where we had discussed about the accounting policies, something on the accounting policies. Come on.
सर इंडेस याद आ रहा है.
No. Apart from India's, there were two different places, I would say, where we have discussed about the accounting policies. No? Okay, no issues. One, remember we discussed SA 510. What was 510?
Initial audit engagement, opening balance.
So over there, we were discussing about the consistency of the accounting policy.
Yes,
Remember,
sir.
whether the accounting policies had been applied appropriately as they were applied in the previous financial year.
Yes, sir.
Yes,
So
sir.
consistency of the accounting policy, one part was coming from SA 510. Okay. Then again, when we talk about SA 315, we over there also look into, accounting policies that when we prepare the, audit plan and detailed audit program, when we assess the risk of material misstatement, over there also we go and we assess the financial policies, accounting policies, okay, to perform the risk assessment part. So it is, you can say, a combination which is coming from SA 510 and SA 315. Okay. Then we have conclude on the appropriateness of the management and board of directors use of going concern basis of accounting in preparation of standalone financial statement, and based on the audit evidence obtained, whether a material uncertainty exists related to the events or conditions that may cast significant doubt on the company's ability to continue as a going concern. And if we conclude that there is a material uncertainty exists, okay, we are required to draw attention in our auditor's report related to the disclosures in the standalone financial statement, or if such disclosures are inadequate, then to modify our opinion. So this is nothing but what we have discussed multiple times. SA 540, this part plus this part, both SA 540. So the first part talks about going concern assessment, that you check the appropriateness of the management going concern assessment Remember that we discussed, okay, the appropriateness of management going concern assessment that we are required to check. And second part is, if there is a material uncertainty, you are required to bring attention. If that is not there in the financial statement, then you are required to modify your opinion. Something again coming from, sorry, not 540, my mistake. It is 570. Apologies for that. I don't know why I wrote 540. 570. Okay. SA 570. Remember? And then the next point is that our conclusions are based on the audit evidence obtained up to the date of auditor's report. However, future events or conditions may cause the company to cease or continue as a going concern. Can anyone tell me from where this is coming? Which essay? Which essay is this?
SA 560, subsequent event.
Yes, absolutely correct. So in 560, we discussed about that we are required to understand about the events that are there till the date of audit report. We are subsequent event. Remember, three portions. One, from the date of financial statement till the date of audit report. Second, from the date of audit report till the issuance of date of audit report. And third, beyond that. For the first one, obtain sufficient and appropriate audit evidence. For the second and third, only respond appropriately. So we are talking about the first one, from the financial statement till the date of audit report. And you are required to obtain audit evidence for that. Clear? With this one? Okay. Again, then we are required to evaluate overall presentation, structure, content of the standalone financial statement, including disclosures, and whether they, statement represent the underlying transaction and events in the manner achieve fair presentation. So this is something that we have discussed in the start again, that, fair presentation framework, whether fair presentation framework is there or not, compliance with the fair presentation framework. Then the next part is, again, in the auditor's responsibility, we communicate with those charged with governance of the company and such other entity included in the standalone financial statement, which we are independent auditor regarding, among other matters, the planned scope, timing of audit, significant audit findings, including any significant deficiency in the internal control that we identified during our audit. Where this was covered?
SA 260
and
265.
Absolutely. Remember, in SA 260 and 265, there were a list of matters which we were required to report to the management. One was the planned audit scope, time, and that how we are going to plan the audit, how we are going to perform the audit, the time, the nature, the extent, significant audit findings, significant difficulties identified during the audit. And 265 talks about significant deficiencies in the internal control that you are required to report to the management and those charged with governance. Then the next paragraph is again that we also provide those charged with governance with a statement that we have complied with the ethical requirement regarding independence, and to communicate them or relationships, other matters that may be reasonably be thought to bear our independence and where applicable related safeguards. Again, from which essay this is coming?
SA 250.
Which essay this is there? Not 250.
265.
It is 260 again. So in 260, one of the part was where we report about the ethical requirements. Remember?
Yes, sir. Yes, sir.
In essay 260, there was one part where we were talking about we report to the management that, okay, management, we have complied with all the ethical requirements and we are independent.
Yes, sir.
So over there, we discuss this one. And again, this is part of SA 260 only. Okay. So that we are reiterating over here. Now, this particular part, this one, I will skip as of now. Reason because this is nothing but the key audit matters, which we are still not covered, and the responsibility of key audit matters as per SA 701. So again, we are reiterating the responsibility under the key audit for key audit matters under SA 701 in our auditor's responsibility segment. But as of now, I will skip this part. I will come back when I will discuss SA 701. Okay. So this was your auditor's responsibility section. Now tell me, is there something that we have not studied or not gone through till now? It is everything that we have discussed till now. Combination of everything at one particular place. So whatever we have discussed in auditor's responsibility is something that we already know, either in SA 200, 315, 560, 540, 570, different essays, but the requirements, the responsibilities of the auditors are then, merged into one particular paragraph so that the reader can understand what is the auditor's responsibility. Clear? Any doubt till now? Any doubt? No. Okay. If no further doubts, let's take a quick 10-minute break. Okay, we have discussed a lot. We have discussed a lot of paragraphs. Okay, let's take a quick 10-minute break. Try to grasp and understand what we have discussed till now, just in the terms of paragraphs and everything. And after 10 minutes, we will continue the session. And I will, discuss some more auditors' responsibility, which is not there in this standalone, but might be there in consolidated financial statement. So we'll discuss that after the break. Okay, so let's take a quick 10-minute break. Thank you. So now we will be discussing, some further auditor's responsibility with respect to the consolidated financial statement. This was standalone financial statement that we were discussing. Now we will see a setup of a consolidated financial statement, and we will analyze, is there any additional auditor's responsibility with respect to the consolidated financial statement? And what I understand is, yes, there will be. Reason because when it comes to the consolidated financial statement, auditors are required to report on the consolidated financial statement, which may include, multiple entities and some other additional procedures that are required to be performed. So I'll just go quickly on the consolidated financial statement and we will discuss that. Okay. See over here. So this is the auditor's responsibility with respect to the consolidated financial statement. Now here, again, this part is similar that we have already discussed. This part is also similar. SA 315, again, similar risk assessment. Then you have an understanding of the sections 143, similar. Accounting policy, similar. You have a management use of going concern basis and going concern assumption, similar. Now this one, see, fair presentation. Earlier we were talking about standalone. Now we are referring to the consolidated financial statement. A slight change. Okay. Then this part, which is different, which is obtain sufficient and appropriate audit evidence regarding the financial statement and financial information of such entities or business activities within the group and its associate, joint venture, joint operations to express an opinion on the consolidated financial statement. We are responsible for the direction, supervision, performance of the audit of financial statement or financial information of such entities included in the consolidated financial statements of which we are independent auditor. For other entities included in the consolidated financial statement, which have been audited by other auditors, such other auditors remain responsible for the direction, supervision, performance of the audit carried out by them. We remain solely responsible for our audit opinion. Our responsibility in this regard are further described in paragraph A of section titled Other Matters paragraph in the audit report. This is something with respect to SA 600 and with respect to the consolidation that we have seen already in other matter paragraph. So one additional paragraph on the auditor's responsibility when it comes to the consolidated audit report or audit report on the consolidated financial statement. Okay, in line with my SA 600. Clear? Any doubt? Yes, no?
यहाँ पर ऐसे 299 भी इंक्लूड नहीं होगा या फिर सिर्फ 600 ही?
Reason because if it was a joint audit, I would have included SA 299. But this is the audit consolidated financial statement where the report is being issued for the by the inclusion of subsidiary financial statements, here other component financial statements. So that's why we are referring to SA 600.
Yes, sir. Clear.
Any further doubts? No? Okay, great. So let's go back to the study material. Okay, and we will go through the study material, this particular paragraph. And we will see the things that we have seen already in the audit report. Just, quick recap will be there. So on page number 17.12, you have a point number 9, which talks about auditor's responsibility paragraph. Then the first thing is objective of the auditor, overall objective of the auditor of reasonable assurance and auditor opinion that you are required to include. So as per SA 200, that you are required to mention, that we have seen. Mention about the reasonable assurance. Already we have seen. Then mention about the statement, misstatement that can arise from fraud and error. Okay. First, we are talking about material misstatement and materiality. Then we are talking about, again, about the materiality, that what is materiality? What is the materiality concept coming from as per the applicable financial reporting framework? Okay. So materiality and material misstatement, that is something being discussed. Then auditor's responsibility, basically, which is professional judgment, skepticism. SA 315. Internal audit, again, SA 315. Then accounting policies used, again, something with relevant to 510 and 315. Reasonableness of estimates, 540. Related disclosures by management. Now, again, that would include my disclosures related to the subsequent events, which will be 560 also. Appropriateness of the management use of going concern, this is 570. Evaluate overall presentation and structure of financial statement with respect to the fair presentation framework and everything, which is there in SA 700 itself. Okay. Then you have a SA 600 responsibility, which we just now saw in case of consolidated financial statement. So this is, we have seen till now with respect to the auditor's responsibility. Okay, and these are the, in detail, the description of the paragraphs. The same that we have seen now with respect to the your audit report. Then comes the communication part, where you are required to communicate as per SA 260 and 265 with those charged with governance. Now, plan scope, significant audit findings, deficiencies, then relevant compliance with the relevant ethical requirements, communication with those charged with governance about the all relationships. Okay. And if any, related safeguard that has been applied with respect to the independence. Key audit matters. Again, remember I said I will discuss this paragraph with respect to the responsibility subsequent to the discussion of the key audit matter, SA 701. So that's why I left this paragraph. Okay. Then comes your next paragraph, which is your other reporting responsibilities, which is titled as report on the other legal regulatory requirement. In case of a company audit, can anyone tell me what is the other legal and regulatory requirement on which we are required to report?
Caro.
Okay, Caro. Then
So in case of fraud also, there is a legal requirement for communicating amount relating to the fraud.
okay. Yes. Anything else do you think, that is that should come under this particular heading? Any other reporting requirement under the regulatory purview, like some rules, some sections that requires us to report?
SEBI.
Just as of now, just keep it Companies Act. I will show you more on that, but as of now, just keep Companies Act only.
So director's report?
No, there's a one important section that on which you are required to report.
143.3.
Yes, absolutely correct. So there are matters enumerated in section 143.3 of the Companies Act plus Caro. So one is your Caro plus section 143.3 of the Companies Act plus your rule 11 of the Companies Audit and Auditors Rule 2014. These are the matters on which you are required to report in case of a company, and that will come under the report on other legal and regulatory requirements. Okay, so if any legal or regulatory requirement reporting is there, okay, in that case, it will come under the heading of this particular section or paragraph. Clear? Any doubt? I will show you one more audit report to you, wherein we will see that how this particular section, that is other legal and regulatory requirement, increases because the type of entity changes. So with the change in type of entity, how this particular part is getting changed. So I'll show you one report. Just a minute. Again, the data is available in the public domain. It is not something that is specific or restricted information. You can also download from the public domain and just ignore the name of the company. Okay, so we will go. This is a particular bank. Okay, and we will see now that how this particular paragraph or reporting under this paragraph changes. See, this is the report on other legal and regulatory requirements. Over there, now this is a consolidated one. So they are talking about Banking Regulation Act, Section 133 of the Companies Act and Section 29 of the Banking Regulation Act. Again, they are talking about Section 197 of the Companies Act and 35B2A of the Banking Regulation Act with respect to for the payments and provision of managerial remuneration. Then there is something more, and then they are talking about 143.3. Again, if I show you the standalone part of this particular report, (160). The rest will remain same. It is not something that will change, but yes, the legal and regulatory part will change. So if you see over here, oh, sorry. I'm sorry, I think there is some technical glitch. Just give me a minute. Yeah. So see, here they are starting again reporting on that Section 133 of the Act and Banking Regulation Act, Section 29 of Banking Regulation Act, then again subsection 3 of Section 30 of Banking Regulation Act. This is specific to this particular type of entity because your legal and reporting requirements, legal and regulatory reporting requirement changes with the type of entity that you are auditing and the reporting has been done. So this is a bank. So Banking Regulation Act will be applicable, and the reporting under that act, whatsoever reporting is there, is required to be done under this particular section. If it would have been insurance company, Insurance Act or some other regulations might have been applicable, IRDA regulations, and reporting under those regulations would have been, under this particular heading only. Okay. Even if you see NBFC, if you see electricity company, telecommunication company, if some additional reporting requirements are there for the auditor, not for the management, we are talking about the auditor's responsibility only. Auditor's responsibility to report. That will come under this particular heading of report on other legal and regulatory requirements. So this is how, the other report on other legal and regulatory requirement section is there in your audit report. And that comes in the last. This particular section is the last section of your audit report. where you specify the legal and regulatory reporting requirements. After this particular part, it is just your firm name, FRN, firm name, FRN, your name as a partner, signing partner, which is there, membership number, UDIN, date, and place. So this particular section, again, do not focus on the name of company or the name of partner. It's just an information publicly available that we are referring for the understanding the audit report. Okay, so this is how your audit report from start to end is drafted, is required to be prepared. Remember, UDIN is mandatory. We have already seen in chapter number 19 about UDIN. So UDIN is mandatory, that is required to be mentioned at the end of your audit report. Clear? Any doubt till now? Any doubt with respect to any part of your audit report? Any doubt?
Sir, you have told the when the opinion is disclaimer of opinion, the entire paragraph will got changed. Can you have you any report?
Yes, I do have. So I will discuss that report when I will discuss the SA 705. So
Okay,
I'll bring that report. I will bring adverse report. I will bring qualified opinion. I will bring the disclaimer of opinion. And we will compare all the three one by one to see how the reporting is done.
okay, sir.
Any other doubt? Any other doubt? Okay. If no other doubt, then this was the standard audit report that we saw. If you don't have any doubt, then I have a doubt. What if the report format is prescribed by the law? If there is a law or regulation that prescribe a specific layout of the auditor's report, what should be done? Can anyone tell me what you would do when there is a specific layout that has been prescribed by the law? And with an example, have you seen any such case where the layout has been prescribed by the law? I have seen.
Sir, actually, I have not seen the actually don't focus on the that much कि वो change होगा, but in banking the financial statements format got changed.
Financial statement is fine. I'm talking about audit report. So you do not prepare audit report like this. You prepare audit report in some other way. Because law says you to prepare in that way.
तो लेआउट तो उनका ही फॉलो करेंगे, बट जो हमारी हेडिंग्स है उसके लिए हम स्टैंडर्ड्स ऑन ऑडिटिंग को ही रेफर करेंगे.
Sometimes that is also not allowed.
Standards भी allowed नहीं है.
Now, following standards is there, but the way of reporting, like including the heading, including the paragraph and all that stuff is not allowed. So you might have seen that already. I am sure that you guys are aware, you have heard about that particular scenario.
Sir, आप दिखाओगे तो तुरंत याद आएगा.
How many of you have seen Form 3CB?
Yes, sir.
Well,
Income tax.
tax audit report, that's it.
Yes, that's a tax audit report, but it is applicable when the audit is required to be done. Again, you cannot say that you are doing an audit, but you will not follow essay.
तो but वो totally format उसका different होता है और इसका format totally different है.
Exactly, exactly. So the question comes is when you have a different format, when your format of audit report is something altogether different, then what?
Then, sir, we have to follow that format only.
Yes, so we
The
see now
requirement of that format, just like उसमें जो requirement होता है कि यहाँ पर क्या देना है और क्या नहीं देना है.
yes, yes,
Just like
absolutely correct. So
Actually, sir, इस रिपोर्ट में हम अकॉर्डिंग टू कंपनीज एक्ट एंड कंपनीज रूल्स इसके अकॉर्डिंग चलते हैं, और इनकम टैक्स के अंदर एज पर इनकम टैक्स एक्ट और इनकम टैक्स रूल्स के अकॉर्डिंग और टैक्स ऑडिट रिपोर्ट तैयार करते हैं.
absolutely, yes. So when you prepare Form 3CB, okay, that is when the audit is not being done under any other law or regulation, you are doing the audit along with you are reporting in the Form 3CB. Okay. Now, over there, do you prepare two audit reports, like the main audit report and the Form 3CB audit report?
Yes, sir.
Or you prepare just Form 3CB?
Means?
When you do audit under form, on tax audit, when you do a tax audit for the entity, like which is not being audited anywhere else, how do you prepare the audit report? Just Form 3CB, or apart from that, do you prepare anything else?
The Form 3CB and 3CD दोनों
Are
form
the ones that you prepare, correct?
Yes, sir.
yes.
Form 3CD and 3CB are the ones that you prepare.
Yes,
Okay.
sir.
So in that case, SA 700 also provides you something, some guidelines that, okay, when the law or regulation prescribe a specific layout, what auditor should do. Because these kind of scenarios can be there. I just gave you one example, but these kind of scenarios can be there. So tomorrow some different law can be there. And at that point in time, I cannot say that, okay, my SA 700 does not provide me the details. So the 700 is drafted in such a way that if there is a scenario in future or also now where that, the law prescribes this, the specific layout or the wording of the audit report, in that case, the following are the details that you are required to check that it should be there in your audit report at minimum. So these are the at minimum elements that should be there in that wording. So which are those? Number one, it is a title. Again, this is at minimum when law or regulation of the applicable, entity uses a specific layout or provides a specific wording to the audit report. Then you should have a title. You should have an opinion addressee, like, okay, to whom it is being addressed. You should have an opinion section where you are prescribing the reference to the financial reporting framework. It could be a fair presentation framework, perfectly fine. It could be a compliance framework, but there should be applicable financial reporting framework. Then identification of entities financial statement, like which are the financial statement. Again, a statement of independence on the auditors and ethical requirements that you have followed. Going concern, if applicable, basis of qualified opinion, if applicable, and going concern, basis of, basis of qualified opinion, if applicable, and key audit matters, if applicable. Okay, so these three paragraphs, if applicable, then otherwise perfectly fine. Management responsibility, reference to SA, signature, date, place, and that the below part that we saw. So these are at minimum should be there when when you are using a specific layout or the wordings that is prescribed by the law. Clear? Any doubt?
Yes, sir.
Okay. So this is, the requirement of SA 700, that, okay, like if you have some, some specific scenario, even this particular scenario is applicable when you prepare your financial statement under special purpose framework. So if there is a reporting under special purpose framework, we will see in the coming sessions, we will see what is reporting under special purpose framework, what is preparing financial statement under special purpose framework. But as of now, if there is a reporting under special purpose framework, this particular part comes into picture. Any doubts? If you don't have a doubt, then I have a doubt. The doubt is, what if your audit report, okay, the audit report that is conducted, okay, is required to be prepared for standards which are issued in India, but for the also standards that are of any other jurisdiction. So let's say,
Repeat your question. Repeat your question. What if?
so basically, let's say for example, you are auditing an entity that requires an audit report not only for the Indian purpose, but to submit audit report outside India in a foreign jurisdiction, in other jurisdiction, and they want you to do audit, okay, by following those standards also.
Sir, like transfer pricing?
No,
No.
not transfer pricing. But let's say, for example, there is one country, okay, hypothetical example, let's say there is an X country and the company is listed in the X country also. They want audit report to be complied with the standards of that X country also. And then they ask you, okay, please give me an audit report and conduct the audit by complying both. Like you comply with the Indian also, or you comply with the international also, that X countries. What you will do?
First, separate report to complying with that standard, which is required for the other country. With an extra, kind of an extra.
Okay. So you're saying separate report you will issue.
A kind of an extra. It's not.
Okay. Understood. Anyone else?
Yes, sir. We will issue a report which will which will useful to that country only, and that with uh, limited access, or not for everyone.
Okay. Okay. Anyone else with something to add more on to this?
Sir, if other countries' requirements are not in conflict with the requirements of SS, then we will prepare one single audit report, and at each time we will give reference to that we are at the same time following those standards also.
Yes. Yes, absolutely correct. First of all, your responsibility includes to identify a conflict. So, for example, what if they are aligned with the international auditing standards on auditing or Indian standards on auditing, like the essay issued by the ICAI? What if they are totally aligned with that? Then you need not to, there is no conflict, then you need not to worry. If there is no conflict, okay, and the auditing standards of the other jurisdiction are similar to what we have in here in India that has been issued by the ICAI, okay, then you are not required to issue a separate report. Just make sure the minimum elements that we have discussed should be there. Okay. If there is any specific regulatory reporting requirement, then again in the paragraph of that particular law or regulation, that you remember other information with respect to legal and regulatory reporting, You mention over that okay, this is the particular thing that under which we are reporting this particular part. Okay.
Yes,
So
sir.
accordingly, no need to issue two reports, two different kind of reports. In that case, see, for example, what happens is if there is a different standard, okay, if there is a no conflict, in that case, if you issue two different reports on a same financial statement, it could be a misleading also. And sometimes it may happen that okay, I am issuing one report in a one way which is appearing unmodified opinion. The other report which is issued for the foreign jurisdiction is appearing as a modified opinion. You cannot have a two different opinion on same set of financial statements. So that's why again we will see the same thing in SA 720. Can we have a two different opinion on the same set of financial statements or same set of figures? Answer is no, we cannot. And accordingly, we need to issue the report that should be in compliance with both of the things.
But sir, something is carve in and carve out with the standards also now. Something is like accounting standard carve in and carve out. There might be the standard with auditing carve in and carve out with other countries' standards. So
Yes. Yeah.
in that case, we need to publish or we need to point out that difference in the audit report also now.
See, now that the question comes is whether that is a conflict. Carve in, carve out, perfectly fine. Now, there could be some exceptions, there could be some difference. Whether that difference or something exception which is over there is resulting in a conflict.
Yes, sir. Then that is.
Yes.
Sir, आप बोलिए.
Yeah. So we need to first understand if there is a conflict or not. Okay. If there is a conflict, then in that matter, based on the conflict, we need to analyze, would it be appropriate to issue a report together on both of the assets? If, let's say, for example, if it is a conflict on, let's say, for example, opinion paragraph itself, that you are not required to word as an, unmodified opinion, or this should be not, this should be basis of the modification. Okay, very big difference. In that case, the question comes is whether you are required to issue audit reports together, like, both of the opinions in same audit report. So the thing is, one audit report cannot have two different kind of opinions. That is for sure.
That time we need to issue a separate report, right?
At that time, answer is not that much simple that you need to issue a different opinion or you can include different paragraph. But the thing is that totally depends upon the type of conflict, how big that conflict is. If that is a conflict of such nature that yes, you cannot issue two reports together and that will be misleading, in that case you might need to issue a separate report, but again the references are required to be provided.
Okay, sir.
So that is a very complex situation, and that is a case-based situation that is required to be dealt when that, if there is a conflict is there and how that conflict is required to be addressed.
Excuse me, sir. It may be not that much of any ऐसा क्वेश्चन नहीं है, बट मैं समझना चाहती हूँ इसीलिए पूछ रही हूँ. आपने वर्ड यूज किया मिसलीडिंग, एंड वी विल ऑल्सो यूज मिस स्टेटमेंट, एंड ये दोनों वर्ड क्या यानी इक्वल हैं या फिर इन दोनों में से मिसलीडिंग ज्यादा बड़ा है?
No, see, both are different and both are required to be used differently. When I say misleading, that means, that is the financial statement are not showing the correct pictures and they are drafted in a way that is, is or giving some different information to the users.
Okay. To influence the user's decisions.
Yes. even that can be there with the opinion. If we draft opinion incorrectly, it could be misleading to the readers. That okay, readers are not able to understand what our opinion is. Like, they are not able to get the understanding of the particular part. Now, misleading can be due to misstatement or can be due to other reasons also.
Okay, sir.
Okay.
Thank you, sir.
So misleading, you can say, is kind of a situation, whereas misstatement is kind of a reason.
Okay, sir. Thank you, sir.
Now, another part that I want to discuss, apart from this one, that okay, on the separate audit report, another part is that about is a supplementary information. Okay, I'll show you with an example only. So we'll go back to our audit report. Let's assume for time being, okay, I'm not saying it is a situation, but let's assume for the time being. Let's say any particular given information which is there in the audit, in the annual report. Let's say, for example, I'll go to some random information. Okay, let's say this one. This is a random information. Okay, I'm just speaking randomly. What if this is shown with the financial statement? What if the management include these particular information after financial statement? Hypothetical example. I'm not saying that it's a real one, but hypothetical example. If management shows any of the information along with the financial statement, or let's say if I have some statement like this one, breakdown of policies, I show with the significant accounting policy, this particular information. What you will do as an auditor?
So I
in that
will
scenario?
first check whether such supplementary information is integral part to our financial statements which we are auditing or not. If they are integral part, then we are equally required to check such information whether it is in accordance with the audit opinion we are given. And if that part is not an integral part, then I will make sure that at least it is presented in such a way that it should not form part of my audit report to the users.
Absolutely correct. Very good. Yes. And this particular information is known as a supplementary information. Okay. Now, supplementary information is something that is not required by financial reporting framework. Okay. Again, supplementary information, which is given on your page number 7.20 on the study material that we are referring here, is not required by the applicable financial reporting framework. That is an additional information that is there. Now, when it comes to supplementary information, okay, the question comes is whether this is required and this is part of the financial statement. Although this is not required by the applicable financial reporting framework, can I call this as supplementary information as an integral part of the financial statement due to the nature of it, how it is presented? For example, I'm doing over reporting. Over reporting means, let's say, reporting of revenue was only required. Okay, so revenue from operations, revenue from this kind of operation, revenue from indirect operation, something like that. But I went ahead and I reported revenue, let's say, from operations quarterly basis. I reported revenue from operations on month-on-month basis, or revenue more bifurcation. I disclose some more information. Revenue from operations, this kind of operations, that kind of operation, with much more detail, which is not required, but I'm doing over disclosure. So that becomes your integral part of the financial statement. Okay, but that is supplementary information, which is not required by the financial reporting framework. Although it is an integral part because this is something related to the financial statement, but it's not required. I'm doing more of my own. Okay, so you need to understand whether that is your integral part or not. For example, in certain cases, let's say the reporting requirement or aging of the trade receivables is not required. If you see the division 1, okay, sometimes or if there is a, it's not a company, still if not a company, then the aging of a trade receivable might not be required to be reported. In that case, if I am reporting that, that becomes an integral part, but that is not required as per the applicable financial reporting framework. That becomes your supplementary information. Now the question comes is whether this supplementary information is with the financial statement or is something altogether different, not integral part of the audited financial statement, means something which are not audited or not considered as a financial statement. The example which I showed you, some other information which is there in annual report presented in your financial statement. Now the issue is if that kind of information is presented with your financial statement, then the issue comes like, okay, reader will understand, no, this is part of financial statement. This is given between the, your balance sheet, P&L, and all these things, means that is definitely audited. If I just add one particular, random page between your financial statement, the person who will read the financial statement will consider, no, this is audited. How we will come to know that this is not audited part? As a result, if that is not the integral part of the financial statement, you need to ask the management, please clearly and sufficiently differentiate this information from the audited financial statement. Present in such a way that it should appear this is a separate from the financial statement, audited financial statement. So you need to ask management to sufficiently and clearly differentiate this information from the audited financial statement, so that the reader should not get misunderstand this particular information as the audited financial statement. Okay. If management does not change, if management is not changing that, okay, management saying I will not remove this from this financial statement portion, I will keep this other information, supplementary information, here only, then in that case you need to identify that unaudited information, supplementary information in your audit report and explain that this is not audited. This supplementary information is not audited. It is there as a part of audit report, but I have not audited that information because this is a supplementary information, not integral part of the audited financial statement. Clear? Any doubt with this? Any doubt? Any doubt, please? See, this is very important for us to understand that, okay, whether these informations, how they are reported, because till the time you don't understand what is the financial reporting framework, you will not be able to identify whether, it's a supplementary information or not. Okay. So it is very critical to understand this part.
सर
Yes.
तो यहाँ पर जो ये सप्लीमेंट्री आपने जैसा कि अभी बताया कि अगर वो यानी मैनेजमेंट नहीं हटाता है तभी भी हमको ऐसा लिखना है कि हमारे द्वारा ऑडिटेड किया हुआ नहीं है ये, तो ये ऑडिटर यानी ओएम पैरा में या ईएम पैरा में दिखाएगा या फिर यानी इसी सप्लीमेंट्री इंफॉर्मेशन के आसपास से ही दिखाएगा?
Very good question. How we are required to disclose this particular part, like how we need to disclose that in our audit report that we have not audited this particular information. Any guesses where you will report?
Other matter, para.
Okay, other matter paragraph. Anyone else with a different answer?
Sir, I have 3 options.
Yes.
Other matter paragraph, EOM and other information.
Okay. All the options basically. Okay, fine. Anyone else with a different answer? Okay. So I'll tell you, when you have this kind of supplementary information, okay, presented like it appears like an audited information, and you ask management does not separate it from the audited financial statement. In that case, you are required to provide that this is an unaudited supplementary information. Okay, this is not covered by auditor's opinion. You can identify this particular part in your opinion paragraph itself, because my opinion, where I'm giving my opinion, over there I am mentioning all the titles and everything. Over there I'm mentioning that this is the titles that I have audited. Over there you can explain that my opinion does not cover this supplementary information. So you can specify in your opinion paragraph. Clear?
Yes, clear, sir.
Because otherwise what will happen is, once you have given your opinion, okay, over there you are not mentioned anything. Somewhere down the line in the other meta paragraph, somewhere, you are mentioning that, okay, this is supplementary information. Again, could be confusing for the reader. Could be confusing for the reader. And one more thing is, you need to remove cross-referencing from the financial statement with respect to the unaudited supplementary information. Okay, means, let's say for example, if there is a cross-referencing done, let's say in P&L or in schedules, notes to the profit and loss account, if there are any cross-reference done to the supplementary financial information, or some notes have been given which are referring to that particular information, you need to specify that in your opinion also, that okay, if there is a cross-referencing, that cross-referencing also, that information which is there in the cross-referencing is not audited. That has to be, there should be a separately demarcation that, okay, this is audited and this is not audited. Sometimes management might include supplementary information in the notes to financial statement, just a below footnote. So over there also, it has to be specifically demarcated that this is unaudited information. Not only a big statement, big tables and everything, but even footnotes or notes to any schedules. You can ask management, to present all such notes which are unaudited outside the financial statement, somewhere at the end of financial statement. Okay, or keep all the unaudited notes at one place, not one here, one there, one here, one here. So this will create confusion. Again, we will see with the supplementary information more under SA 720. Okay, something related to the supplementary information we will see in SA 720 also. Clear? Any doubt? Any doubt till now, guys? Any doubt? Okay. If no further doubt, that was your SA 700. That till now, what we have discussed in the audit report was your SA 700. Now, if no doubt with respect to the SA 700, I will discuss another part, that is SA 705. Not SA 701, but 705. Because I want to continue with the different type of opinions. Okay. I want to continue with the modified opinion that we have seen. Like what changes it will bring when I present a modified opinion. What changes it will bring when I present a disclaimer of opinion. Okay. So that is already covered under your SA 705. Now, what SA 705 says, basically, when there is a modified opinion, or when there is a, adverse opinion. So we need to understand opinion by opinion what each, requirement is there for each of the section. The requirement is there. Okay. I will just first go to the notes. Just a minute. So over here, we discussed about different kind of modified opinions, which could be qualified opinion, which could be adverse opinion, and which could be disclaimer opinion. First, we need to understand which opinion to be issued at what time. Okay, so we need to bifurcate between all the three opinions, when to issue what. And then on the basis of that, we will go and understand what difference reporting requirement brings. So SA 705, okay, that is your, sorry, yeah, that is your modification to the opinion, modification to the opinion in the independent auditor's report. Okay. Now, can anyone tell me when do you issue which opinion? Like when I am required to issue adverse opinion, or when I am required to issue disclaimer opinion?
सर डिस्क्लेमर ओपिनियन तो तब इशू करते हैं जब हमारे पास को कुछ सफिशिएंट एप्रोप्रिएट ऑडिट एविडेंस नहीं मिलते हैं, और एडवर्स ओपिनियन तब मिलता है जबकि हमारे पास में एविडेंस होते हैं और वो परसुएसिव भी होते हैं, मटेरियल भी होते हैं, परवेसिव भी होते हैं, मटेरियल भी होते हैं।
ओके।
और क्वालिफाइड में सिर्फ इतना सा डिफरेंस होता है कि वो परवेसिव नहीं होते, उनका जो इम्पैक्ट होता है फाइनेंशियल स्टेटमेंट पे वो हम लोग डिटेक्ट नहीं कर पाते कि कितना मिस स्टेटमेंट है, किस लेवल का मिस स्टेटमेंट है।
Okay, good, very good. And what is pervasive that you just now discussed? Like what is pervasiveness?
सर मतलब कि पोटेंशियल है वो काफी, मतलब क्या बोल सकते हैं हम उसको कि सफिशिएंट है नंबर में, कि हम लोग उसको कह सकते हैं मोर देन सफिशिएंट टू गिव एनी ओपिनियन, मतलब किसी क्रक्स पे पहुंचने के लिए मोर देन सफिशिएंट।
Okay, very good. Anyone else? What is pervasiveness? Like what is pervasive that we are talking about?
Its effect is having effect on overall financial statement at the end.
Okay, yes. Overall financial statement, yes, very good. Anyone else? Like if anyone else want to add something more? Not limited to a particular assertion. Very good. Yes. Very good. So based on this, based on the pervasiveness, based on the my materiality, I provide the opinion. So if the first of all, see, modification comes when there is a material misstatement. Okay, modification is there when there is a material misstatement. If there is a material misstatement, now the second thing you need to understand whether this material misstatement is pervasive or not. Okay, is of such nature that it is impacting my majority portion of financial statement. Okay, it is not confined to a specific element. So when I use the term pervasive, that means it is something which is which is of such nature. It is not limited to one particular item like trade receivables. It is not limited to one particular account like inventory or something like that, or item of financial statement. Or if it is limited to one particular account or one particular item or one particular element, then that element is of such nature that it is a substantial portion of a financial statement. Simple example, a company who is into leasing of properties, leasing of commercial properties. Now the company has one income, that is a rent, and a lot of fixed asset, that is a commercial fixed asset, commercial properties in their fixed asset. Now, if I say there is a material misstatement in the fixed asset, which is the commercial property. It covers substantial portion. Although it is confined to one specific element, it is a very substantial portion because they don't have anything other in their balance sheet. Or the disclosure is fundamental to the user understanding. It is very critical. In that case, if the material misstatement is of such nature that it is impacting either multiple accounts, or if not multiple accounts, then single account, but it is such a major portion of my financial statement, or it is of basic or major understanding of the fundamental to the user understanding, like going concern. Going concern is a fundamental to the user understanding of the financial statement. If the entity does not, is not going concern, if they have such scenarios that it is very difficult for the entity to use the going concern basis of accounting, in that case, if they still use, their disclosures are incorrect, and it is of such nature that it will impact the fundamental to the user understanding of the financial statement. In those scenarios, I would say that the misstatement is not only material but pervasive, and I will directly issue adverse opinion. So material and pervasive, adverse opinion when there is a misstatement. But misstatement is there, which is a material but not pervasive. Okay, so I am saying there is a misstatement, perfectly fine, but it is only material, not pervasive. In that case, I will issue a qualified opinion. Clear? If it is a pervasive of such nature that it is substantial portion, multiple accounts, fundamental to the user understanding, adverse opinion. Now comes the disclaimer of opinion. If I am not able to get sufficient and appropriate audit evidence to evaluate the possible effects of undetected material misstatement. So when you have a material misstatement, it is either qualified or adverse. But when you don't get evidence, when you don't get information, when you don't get sufficient and appropriate audit evidence to issue an opinion, and if I say that information which is not given to me, which is not provided to me, could lead to possible effects of undetected misstatement. Now, because of that, there could be undetected material misstatement. Now, if those undetected material misstatement due to information not being available to me is of such nature which is material and pervasive, disclaimer of opinion. Okay, if that is of such nature which is pervasive, means again we discuss what is pervasive, then again I will issue a disclaimer of opinion. But the information which is not available to you, let's say for example you are auditing a financial statement, and there is one portion in the financial statement which is, let's say, investment. Now investment is material but not a majority portion, not a such portion that is a considered substantial or majority portion of the financial statement. There are other things, trade receivables, there are fixed assets, there are other things also. Now you were not able to get any information about investments, so you cannot say that okay, I will issue a disclaimer opinion. No, you have not received information about investment. So in that case, you will issue qualified opinion that okay, I did not get information about investment, but apart from that, I got information about the substantial portion, which is either appropriate or not appropriate based on the audit procedures or the audit evidence. But let's say again the commercial property example, substantial portion in the balance sheet are those commercial properties. You have not received any of the title deeds, property records, any of the thing to verify whether the company actually hold those properties or not. In that case, I cannot say qualified opinion because I have not got any information, and the possible effect of undetected misstatement could be very much high, very much pervasive. Okay, in that case, I will issue disclaimer of opinion. Clear that which opinion to be issued when?
Yes, sir.
Any doubts? Again, I will repeat, pervasive is something like where I have the effect of the misstatement or possible effect on the financial statement, like effect and possible effect, because I am talking about disclaimers opinion also. So I will consider the effect and possible effect both, okay, of that misstatement on financial statement is such that it is not confined to a specific element, the way we discussed about the, let's say it is impacting trade receivables, it is impacting sales, it is impacting inventory, multiple items are being impacted, not confined to one specific element. Or if it is confined or restricted to a specific element, but it is a substantial portion of my FS, or it is related to a disclosure if such disclosures are fundamental to the user understanding, for example, going concern. In such case, I would say the effect of that misstatement is pervasive also, and that will lead to an either adverse or disclaimer of opinion. Any doubt with respect to this one? Any doubt, guys? Because this is something very important to understand, very, very critical to understand, because this is the base for your modified opinion. Based on this, modified opinion is issued. So you need to understand what is a modified opinion and how modified opinions are to be selected. Okay. Now, the next question comes is like, okay, if there is a modified opinion, then can I have, let's say, for example, can I say that, okay, a particular item which is there in the financial statement, let's say investment, I would say investment, I have a qualification. For rest everything, I will issue unmodified opinion. Can I have two separate paragraphs, like one unmodified for the rest of the item and one modified or qualified for investment? Can I have two opinion paragraph in my audit report?
No, sir.
Yes, absolutely.
One opinion paragraph ही होगा, लेकिन we will mention specifically let subject to qualification mentioned under qualification para.
Yes, absolutely correct. So what you will do is, when you have a qualified opinion, basically, okay, at that point in time, you will not issue two different paragraphs. Rather, what you will do is you will issue one paragraph, one particular opinion paragraph where you specify, except for this particular part that I am referring over here, except for this particular part which is being, on which I am doing a qualified opinion, everything is fine. So if I show you example of a qualified opinion, again, please do not focus on the name of the company. It is something, the data is publicly available. It is on page 119. Okay, just a minute. See, here there is a qualified opinion. First change that we are able to see is the change in the opinion paragraph or section title. Instead of opinion, now we have a title as an qualified opinion. Change in title. Plus, there is a change in wordings. That is, if when we write, okay, this is something we have audited, and in our opinion, the first paragraph was identification. You identify everything, fine. You will identify as usual as you do. But subsequently, when you were giving your opinion that according to, in our opinion and best according to the information that we have received, over there you will specify this thing that in our opinion and to the best of our information and according to the explanation given to us and based on the consideration of the reports of other auditors, like this is a consolidated, so that's why we are referring to other auditors. But and from here, except for the possible effects of the matter described in the basis of qualified opinion paragraph below, the aforesaid consolidated financial statement gave information required by the Act in so manner required to give a true and fair view. This particular part, this is except for the possible effects of the matter described in the basis of qualified opinion paragraph. This exception is the qualified opinion. This exception that you have mentioned is the qualified opinion. And then you change the title of the basis of opinion to the basis of qualified opinion. Again, here the title changes. And then you draw your attention to that particular point. For example, we draw attention to note number 36 of the particular item in financial statement regarding non-provision of this particular part of interest of the company, like that, okay, of this particular company in the aforesaid note. The said non-provision of the interest on borrowings of this particular part, this XYZ, okay, this has been provided. Okay, then the important part starts from here. Had the interest been provided by a particular entity or whatsoever, okay, for the year ended this, the finance cost would have been higher by this amount, and the loss before tax of the group for the year ended this would have been higher by an equivalent amount. Accordingly, the net worth would have been lower by this amount as on March, as on this particular dates, like this way. So you are not only giving about the qualification, you are not saying, okay, this is, they are not provided the interest, matter over. So here you are not only discussing about the qualification, that non-provision of interest. I could discuss non-provision of the interest, matter over, things over. But no, what I'm doing is I am giving the effect of that qualification on your profit, on your net worth. That if that was rectified, then what would have been the correct picture? Okay, so it is not only about the qualification that you are required to disclose, it is about the effects of the qualification that you are required to disclose. Are you getting the point? In case of a qualified opinion, okay, you provide that, okay, this is on the basis of that, this is, I am issuing a qualified opinion, perfectly fine. Okay, I am issuing a qualified opinion. But the consequence is that, that you don't only issue a qualified opinion, but you also specify that what is the impact of that qualification. Any doubt? Any doubt till now? So when the material misstatement is related to the specific amount, description and quantification of financial effects of the material misstatement is required to be given. If there is a reference available to the financial statement, that reference is also required to be given. Clear?
Yes, sir.
Okay. Same way, let's say, for example, if there was the issue related to a disclosure, okay, then in that case, we would have brought attention of the user to that particular disclosure, and we would have said that, okay, this disclosure is not correct. Reason, because this is something missing. This is not as per the financial reporting framework. This how it should have been reported as per the financial reporting framework. And then rest of the opinion paragraph, basis of opinion paragraph will be similar, that we have conducted our audit in accordance with the standard on auditing, like everything will be same. And then in the last, remember earlier what we discussed is that we believe that the audit evidence we have obtained is sufficient, appropriate to provide basis for the opinion. Now over there, we will specify basis for the qualified opinion. This is how the impact of a qualified opinion will be there on the financial statement. We will discuss adverse opinion and disclaimer also in a separate, through a separate report, but this is only restricted to the qualified opinion. Okay. Any doubts with respect to qualified opinion or the type of opinions that we have discussed till now? Or any doubt with respect to SA 700 or whatever we have discussed in the previous audit, in the audit report that we discussed from start to end, para by para? No?
No, sir.
Okay. What I want you guys to do, see, after the lecture, go and read the audit report. Read any audit report, any. I'm not saying any specific. Read any audit report and then compare the requirements which are given your study material with the audit report, the way we did. Because till the time you will not read the audit report, you will not understand what is written. Okay, so read. Then after that, go to the study material, again go to the requirements of SA 700, and for the next lecture, please read SA 705, 706. So in the next lecture, I will be covering SA 705, 706, okay, in detail, and we will see the examples of the adverse and disclaimer of opinion both. Okay, so please be ready with your doubts, be ready with the study material, read it, so that when we will discuss, you will get a good understanding of the topic. Okay. If no further doubts, then I propose to keep the session till here. Okay, guys, and I will see you in your next session. So thank you, guys. Thank you for your time. I will see you in your next session.
Thank you, sir.
Thank you.
Thank you, sir.
Yes. Thank you. Good night.